Welcome to Consumer Math. I'm going to go and zoom like that. Today's date is January 4th, 2021. All right, so 2020, you set the bar real low. We will make 2021 a much better year, won't we? Can everyone please turn on your cameras too so I can look at your beautiful face? Our new unit, Unit 4, we're talking about paychecks and benefits. So all of today is about how to read a paycheck and how to fill out a W-4. In 2018, they changed W-4s. I don't know if anyone even worked before 2018. With a raised hand, or you can say so in the chat, did anyone have to fill out a W-4 before 2018? Did you work 2017? Okay, so you will actually know then, Aurelio, the difference between the 2017 W-4 and the 2018 W-4. There was a change that made things easier, in my opinion, but we'll talk about that in a little bit. So here is my pay stub that I just got 4 days ago. Let me get rid of those boxes too. I'll have to redo the date, won't I? So 1/4/21. This section is how to read a pay stub. So just out of curiosity, you can either give me a thumbs up or raise your hand. How many of you guys have your own pay stub that you've seen before? I'm hoping the majority of you have. If you get like cash under the table, then you probably don't see this. But if you have like a job where you have the option of like a direct deposit or something like that, usually you'll get a pay stub that looks like this. But so far, I've only seen 2 hands that said, yes, you have seen your own pay stub. Martine is having his hand up. I see that. Anna is a yes. Is there anyone else? Aurelio's giving me a thumbs up. Gunnar, yep. Okay, so a pay stub is just a receipt to say this is how much money you got and where everything went. When you look online to look up a job, like how much does an engineer make? You'll see like, okay, great, I make $80,000 a year. You don't actually get $80,000 in the bank, as most of you have realized. It's much less than that. And we'll talk about why in a bit. So reading my pay stub, again, just looking at my first section, my income, what's going on here? So NML, just my normal pay per month is 60,000, or sorry, not 60,000, that would be crazy, $6,042.40. So NML for at least my pay stub is my normal salary per month. I also get some additions here. So I'm gonna say this is my normal pay, my base pay. This is what shows up online when you search up how much does a teacher make in the Eastern Sierras. My BILN code, you don't need to know what that code means. It's just an additional amount of money. I get another $50 each month because I have the credential to teach people that are learning English. So I don't know what this stands for. I think it's bi-language or something like that. I can teach ELLs, so I can get another $50. I have my master's in education, so I get another $250 a month. And I also work off the table. If I tutor a student over the break, or if I tutor a student after hours, I log that and I get paid additional amounts depending on how they categorize that. So this is all of the income. And if you add it all up, it should eventually come down here to my total gross. So if I add all of those up, I get $6,640.52 a month last year. But you'll notice that I only get $4,110 of that 6,000 that month. Why? And how does that, what is the flow of money? So there's taxes, and you have to be paying taxes each month on the money that you get paid. Otherwise the IRS is going to come after you and be like, pay us money. And then if you don't pay us money, pay us even more money and more money. There's like interest on the money that you owe them. You get fined if you're not paying them on a monthly basis. And how you pay them is affected by how you fill out your W-4, which we'll talk about in a bit too. So notice that I have three things right here: federal tax, state tax, and Medicare. These are what's known in the business as statutory deductions, and I'll write this underneath in the notes as well. What are statutory deductions? Statutory deductions. My informal definition for you is it's things that you are required to pay by law. So you have to pay because it's the law. And then here are all the things you have to do. You have to pay federal income tax. This is generally the largest piece. This is the money that you're paying the government to run the government. Yes, you can argue they might not be very efficient with that. Maybe they'll charge you $100 to buy this tiny little booklet or something like that. Yes, there's a lot of waste in the federal government, but hey, you're helping them pay so that they keep you safe. They fund the military. There's all these nice things like internet services that they're helping mandate. Great. State income tax is the next one. Social Security. Social Security. And Medicaid. You can say Medicare / Medicaid. Can't spell. Medicare / Medicaid. And these last two have their interest rate or the rate of your gross pay locked in, and they've been locked in, I don't even know, since I was working. So a while, for at least like the last 5 years. They haven't changed. Social Security, that's always been 6.2%. And Medicare, Medicaid, that's always been 1.45%. And I should also mention, you don't need to know this, but while you are paying 6.2% of your gross earnings, you're paying that to Social Security, your employer should also be doing that. They take from me, the person that's working, and also the Eastern Sierra Unified School District. So they're really, Social Security is getting 12.4%. But from my perspective, it looks like I'm only being taxed, I guess, 6.2%. All right, so those are the statutory deductions up here. And you can calculate, okay, well, what rate is Mr. Sindel paying? Because if you say, okay, my total gross income is 6,640, so you can do a little bit of math over here. You can say, well, Mr. Sindel is paying 621.95 divided by total gross 6640.52. What percent is Mr. Sindel paying for his federal taxes? And just pull up your calculator. 621.95 divided by 6,640.52. I'm paying about 9%, 9.36%. So this is equal to 9.36%. And I'm just curious, you guys, does that sound like it's too high, too low? Is that right on the money? What do you feel like this should be compared to the actual federal tax? Because this isn't the federal tax. It's close, but it's not there. Does that feel too high? We'll do thumbs up is too high, thumbs down is too low. I know that you'll have to turn on your cameras probably for this because I think there's only a go slower button. Does anyone have any general feeling about what this percent is? Is that okay? Right in the center? Not getting a lot of reaction. Maybe it's because you have no clue. Well, you can do this. You can just Google, what is the federal income tax rate? And it depends. It depends on what tax bracket you're in. So it depends on what tax bracket you're in. And I wonder if it will show me my tax bracket. There we go. So I make between, let's pretend I'm single, right? So if I'm single, then I'm making this amount of money. I should be taxed at a rate of 22%. So why is my federal income tax only 9.36%? So this is low. I would have done a thumbs down, would have been the correct option. Any ideas on why that's low? And this is me not knowing how much you guys know about taxes. We haven't had our unit on taxes yet, right? Yeah, taxes is unit 7. We haven't even touched on this. So while I am forced by law to pay taxes each month, at the very end of the year, you have to figure out, did I overpay on my taxes or did I underpay? So right now, Mr. Snell is underpaying taxes. I'm underpaying on federal taxes. On federal taxes. And you could just check that on your own as well. You can say, okay, my state or my federal tax is $621. You divide that by your total gross income, or I guess it should be your taxable gross income, because I forgot about this guy right here. But mainly, yeah, you calculate your percent and you see if is that over or is that under whatever tax bracket you're in. If it's over, that means when you file your taxes, you get money back. If you're filing under, like I am right now, this is definitely under 22%. That means I'm going to have to pay taxes in April or whenever I file taxes if I do it a little bit early. And you get to control how much they're taking out right now to some degree, and that's how you fill out your W-4. Again, state tax is kind of the same thing. You divide your state tax by your taxable gross income and you can figure out what that is. So I can write over here, this is how much I'm paying. What I should be paying is 22%. 22% is what I should be paying. This was for federal. What about for state? For state taxes, I'm looking at 230.74, and this time I'm going to do it correctly. I'm going to divide it by my total tax gross income. So I'm going to divide that by $5,980.69. Let's see what that is. 230.74 divided by 5,980.69. And you can see that's about 3.85%. So this is 3.85%. And again, compare this to what should I be paying? And by the way, these tax percentages, especially for state level, they can fluctuate up and down from year to year. So you have to kind of just Google from year to year. We're in California, so California, oh, I can't spell California state tax rate. It knew what I was thinking of. Currently, I want income tax. Sales tax. The top marginal is 13.3%. I don't know if that's actually what it is for me though. Let's pretend my, it already has a chart down here. Let's pretend I'm single again to make things easier for you guys. So I'm right here, I'm about 8%. So I should be at about 8%. So again, you can see, oh, Mr. Sindel is underpaying on his state taxes, which means when Mr. Sindel files for taxes in April, he's gonna have to pay taxes. If this number was like 9%, that would mean I would be getting money back. Okay, I'm like 3/4 of the way done talking.
Oh, yeah. Taxes aren't like a charge. Like if when you go to the grocery store and buy a bag of oranges, you pay $5 or whatever. So it's not like the government is charging you for your medical care or something. It's more like you're giving them money.
Tax is everything. Like I should look up the meme on government paying tax. Like literally anything that you do, almost anything that you do, the government is gonna take a piece of that pie. Like if you're gonna buy, I don't know, a PlayStation at the store, the government wants a bit of that, like a bit of the money that you're gonna go into that. Whenever you pay taxes at the store, yes, that goes to the government. Whenever you pay taxes on your salary, that goes to your government. Almost any transaction that you do, with a few exceptions, I think like certain types of food, and like other weird things are not taxed. Almost everything, a part of that is going to go to the government to help fund the government. So this is just another form of taxes. While yes, there is a tax on like just buying stuff at the grocery store, there's this income tax as well. And I kind of, is it okay if I go on a brief rant for a bit, guys? I'm getting a head nod from just one. I'm gonna guess the rest of you are okay with that too. So the United States is one of the, I think it might be the only country, I might have to go look this up afterwards, where the government does not tell you how much money you owe. You have to do your own taxes, and that's very atypical in the 21st century. Like if you move to Canada, what would happen is, yes, you'd still have to pay taxes each month. That doesn't change. But at the very end of the year, they send you a letter or an email or something and say, hey, you overpaid, here's your money, and then you're done. Or they'll send you an email or letter in the mail and say, hey, you owe us 3,000 some odd dollars, and then you send them that money and you're done. That's how easy it is. They calculate it for you. The IRS in the United States wants to do that. They've been wanting to do that for a long time. Each year they're saying, can we just tell people how much they owe in taxes? And guess who says no? The lobbyists for tax programs like TurboTax, they are pouring tons and tons of money into lobbying to say, no, don't let the IRS do the calculations. We have software that we can sell to people, so they have to figure it out on their own. So that's the reason that things are so hard in April in the United States and not in other countries. And it's pretty dumb, in my opinion, and in most people's opinions too. I don't even know if you guys were aware of that. Well, that's my mini rant. I think it's pretty dumb, and lobbying is good in some cases, terrible in others. This is one of those cases where it's terrible. Anyway, let's talk about the other types of deductions. So these are the mandated, the statutory deductions. I have to pay those. And these are the ones that I don't necessarily have to. It depends from job to job what happens here. These are called voluntary deductions. So let me talk about voluntary. Voluntary deductions, the other half. And these, again, it super depends on what job you have. They're kind of like you have to do them, but it changes from job to job. So voluntary deductions, they're the ones that you can choose to. They're voluntary. Some of them are insurance. If you want health insurance, maybe you can pay that right out of your paycheck. If you have health insurance through your job, that should show up on your pay stub. I know that I have health insurance, but where is that? It is paid. How is that paid? I guess it's paid afterwards since it's not showing up on my pay stub. Usually that shows up there. If you want to do things like retirement, which was our whole last unit, that will show up on your pay stub. So if you have a 401k, that should show up. In this case, I do have that online. So check this one out. STRS, that's CalSTRS. That's the retirement program for teachers that I talked to you guys about, where it's really different than other retirement programs, because it's not like I put away this money and this money is mine and it grows at a constant rate, just like it was in the stock market. CalSTRS is that weird one where it's like, hey, pay this amount of money, and then once you hit this age as a teacher, you're done, you're set, like you're guaranteed that money. So it is a little bit different, but hey, this money right here, this $659.83, that is my retirement money. And as you guys all learned last lesson, anything that you put into retirement, that's not taxed. That's why these numbers, my total gross income and my taxable gross income, are not the same. In fact, if I were to open up my Spotlight search and say, what is $6,640.52, my total gross income minus my taxable gross income, what's the difference here? How much are those different? So $5,980.69. Oh, it's different by $659.83. Oh, if I come back up here and get rid of this, not like that. Get rid of that circle. That's $659.83. The only difference between taxable gross and total gross is this tax-free deduction that goes into your retirement. So you can see, oh, Mr. Sindel isn't lying to us. He was spitting truth at us last unit. And then finally, what is this last one? I pay into a union. So this one right here is my union fees. I know this kind of only affects Anna right now, but as a teacher, usually you want to be part of a union. As a worker anywhere, usually you want to be part of a union. Why? Because unions will collectively say, hey, we will all strike unless we get the following conditions. We will work as a group to make sure that the group benefits. And if you talk, how many of you guys remember like Andrew Carnegie and the history of him like crushing labor unions, stuff like that? Yes, from Anna. Not from anyone else though. Okay, well, unions are really bad if you're the owner of a business, because it usually means that those unions can get better wages. So you're trying to avoid unions at all costs. But as a worker, usually you want to be part of a union because it has a lot of benefits. And I pay about $100 a month into the union, and that helps me as a teacher, so that if, I don't know, there's like a very famous case is like a student said I did something bad and I might get fired for it. Union, defend me. The union was like, we got you. We'll hire you a lawyer. Like, don't even worry about it. They'll cover you. And that's why we like the union fees also. All right. That is my analysis of my pay stub. Ask me questions. No questions?
If you're like a high schooler and you're just working like a minimum wage job in the summer, do you have to pay all these taxes, or like how does that all? Okay.
Yeah, unless it's like, if it's under the table where it's like your employer is just like handing you cash at the end of the day, you're officially, this is going on YouTube, officially the IRS, you owe the IRS that percent of the money, and you do have to file for taxes. But if you don't do it and they don't catch you, I don't know what happens. You can probably figure it out from there. But officially, if it's a job that like you have a direct deposit and they're saying it's official, you are going to be taxed, you are paying money, you should have something like this, that you're paying into Medicare, you're paying into your state tax, you're paying into your federal tax. They're taking a cut of your total amount of money that you're being paid each month. You should be paying taxes even during the summer, no matter what type of job you have. Again, asterisk, unless it's under the table. Yeah, and then I think, I don't know if I made it clear enough, but this is like the positive money, and this is like the minus money column, the income versus the deductions. Deductions, the things that are deducted from your pay, you don't get that money. Hopefully that was clear enough. I have a tiny question that doesn't affect very many people. I talked about my retirement account, my CalSTRS. I talked about the union. What the heck is this one? The deferred net pay. And that's just the thing. Teachers don't work 365 days a year. We have 3-ish months that we're not teaching. So in order for me to be paid those months, I have to say, take some of my money, $822 to be exact, of my pay this month, and then save it for those 3 months when I don't get paid. So it's as if I do get paid throughout the year. And then how are we doing on time? We get out of this period, oh my gosh, in 2 minutes. So I rambled, didn't I? That means I don't have time to do W4s. W4s are going to be 4-2. I'll give you a taste of what tomorrow we're doing. Tomorrow I'm going to go through this form. It's called the W4. It's the form that you have to fill out when you start a new job that's official. And it's basically talking about how much money you get deducted and stuff like that. I just want to walk through it with you guys because you should have done this. And if you're Aurelio or anyone else that has done a W4 2017 or before that, it was very different. It was like you put a 1 or 0 or 1 or 1, depending on how many allowances you wanted. And that was a terrible system because it was super confusing. And but I'll still explain it away too. Cool. Anyone want to show me your notes and not have to worry about that when you get back? We'll go ahead and